For the last decade or so, investing for income has been really difficult. During the pandemic, the Federal Reserve kept interest rates at near zero, and that led to lower yields in fixed income. Now, rates are going up, and we're also facing geopolitical issues and concerns about a potential recession. Now, investors have been dumping stocks in this time, and a lot of them. For example, if you've been holding tech stocks for the last 6 months, you're probably going to be seeing some paper losses around 25 or 30%. So what do you do if you need income? Well, in this video, I'm going to cover 9 high dividend stocks that you can look at today, and all of them are paying over 5%, and a lot of them are well over 5%. And these are not super risky companies. Rather, they are boring businesses, but they have durable competitive advantages led by management that prioritizes paying dividends to shareholders. But before I begin, I wanted to let you know that this video is brought to you by Dividend. Dividend helps investors find high-quality income securities for their retirement and financial freedom portfolios. And the Dividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. In fact, I use Dividend to research the stocks that I use for this channel. So if you'd like more information, I invite you to check the link in the description below and stay tuned because I'll be giving you a coupon code worth a $41 discount. Alright, so the first company on the list of high dividend stocks is W.P. Carey. W.P. Carey is a commercial REIT that operates 2 segments: real estate ownership and investment management. The REIT operates more than 1,200 single-tenant properties on a net lease basis across the US and Europe. Its asset management business has assets under management worth approximately $2.8 billion US. W.P. Carey has grown its dividend very regularly during the last decade. For example, they haven't cut the dividend or froze it during any of that time frame. The company is rather resilient as well. Even during the last financial crisis, the REIT managed to keep its profits stable. With geographic and industry diversification, W.P. Carey is not overly dependent on any single market, which makes the REIT a safer investment. This safety is emphasized through long-lasting contracts, remarkably high occupancy rates that exceed 99%, scale, as well as an investment-grade credit rating. The company's shares currently yield 5.38%. Next on the list, we have Universal Corporation, the world's largest leaf tobacco exporter and importer. It's the wholesale purchaser and processor of tobacco that operates between farms and the companies that manufacture cigarettes, pipe tobacco, as well as cigars. The company is shifting its business model also to include the processing of produce to diversify. For example, Universal acquired FruitSmart, an independent specialty fruit and vegetable company and ingredient processor. It also acquired Silva International, and this is a dehydrated vegetable, fruit, and herb processing company. Universal Corporation is a member of the exclusive Dividend Kings list due to its 50-plus years of annual dividend increases. And if you want to know more about Dividend Kings, check out this video. By the way, Universal's dividend is currently 78 cents per quarter, but if history repeats itself, the company should be increasing it in time for its next earnings report in just a few months. By the way, I got the dividend data and the charts for this video from Barchart. This is the first time that I use them for my videos, and Barchart is a website that I use every single day to find the most up-to-the-minute information about stocks, and I invite you to check them out if you haven't used them before. Oh, and I went ahead and I left a link in the description for a 30-day free trial. Okay, so next we have Lazard, a master limited partnership. Now, in case you haven't heard before, Master Limited Partnerships, or MLPs, were created in 1981 to allow certain business partnerships to issue publicly traded ownership interests. The first MLP was Apache Oil Company. Then many other energy and real estate MLPs got formed. What's interesting is that Lazard is one of the few that does not operate in either sector. One of the big benefits of buying MLPs includes potential tax advantages, portfolio diversification, as well as high dividend yields. Alright, so Lazard is an international investment advisory company that started way back in 1848. The company has two business segments: financial advisory and asset management. The financial advisory business represents the lion's share of the company's revenue. The company earned around $608 million from this segment in the fourth quarter of last year alone. Their financial advisory business includes M&A, debt restructuring, capital raising, as well as other advisory business. Their other arm is the asset management business, and it represents about 80% equities and focuses primarily on large institutional clients, and that division earned them $347 million in revenue in the same quarter last year. Today, the company pays a 47-cent dividend every quarter, and based on today's share price, that represents a 5.56% dividend yield. Next on the list is Altria Group, a legendary dividend stock. It's increased its dividend for over 50 years, making the stock a dividend king. The company manufactures tobacco products, including the Marlboro cigarette brand in the United States, as well as chewing tobacco and cigars. Interestingly, Altria buys much of its raw tobacco from Universal Corp. Since there's been declining smoking rates in the United States, Altria has invested heavily in other categories of growth. For example, Altria bought a large portion of the Canadian marijuana producer Cronos Group. They've invested in the e-vapor manufacturer Juul Labs, and the company, you can't forget, owns 10% of Anheuser-Busch. Interestingly, over the last few months, while other stocks were pounded to death, Altria did okay. I guess Altria investors believe the company isn't really a big worry. Also, dividend investors will love their current yield of 6.5%. Next, we have Main Street Corporation, another high dividend stock on this list. Main Street is a business development company, or a BDC, and it's especially appealing for income investors, not only because it has a high dividend yield, but because it's also a monthly dividend stock. The company operates as a debt and equity investor for lower middle market companies, those with 10 to 150 million of annual revenues, seeking to transform their capital structures. The company invests in both debt and equity. Main Street Capital Corporation also invests in the private debt of middle market companies and has an asset management advisory business. Main Street has never reduced its monthly dividend payout since its IPO in 2007, and in fact they've raised their dividend over 80% since it went public. Today, Main Street Capital's dividend yield is a nice 6.58%. Next on the list we have British American Tobacco, one of the world's largest tobacco companies. British American Tobacco owns many tobacco brands, including Kool, Benson & Hedges, Dunhill, Kent, and Lucky Strike. And actually, like Altria, British American Tobacco also buys much of their raw tobacco from Universal Corporation. Now, astute investors will note that this company is incorporated in the United Kingdom and headquartered in London. However, American investors can purchase its stock through ADRs, or American Depository Receipts, that trade on the New York Stock Exchange. And despite being headquartered in the United Kingdom, British American Tobacco triggers no dividend withholding tax for United States investors. Speaking of which, BTI's dividend currently yields nearly 7.14%. Next on the list, we have Enterprise Products Partners, a premier master limited partnership with a huge network of assets that includes 50,000 miles of natural gas liquids, crude oil, and refined products pipelines. It also has a storage capacity of more than 250 million barrels. In terms of safety, Enterprise Product Partners is one of the strongest midstream MLPs. For example, it has credit ratings of BBB+ from Standard & Poor's and Baa1 from Moody's, which are higher ratings than most MLPs. It also has what we call a distribution coverage ratio of over 1.6x, leaving lots of room for distribution increases and unit repurchases. Enterprise Products' high-quality assets generate strong cash flow even in recessions. As a result, the company has been able to raise its distribution to unit holders for 22 years in a row. And today, Enterprise Product shares currently yield 7.26%. If you think 7.26% of a dividend yield is pretty good, give me a like on this video. Okay, next we have another pipeline company, Magellan Midstream Partners. The company connects nearly half of the entire country with nearly 9,800 miles of pipeline. Actually, it's the longest pipeline in the United States. The company has the capacity to store more than 100 million barrels of petroleum products such as gasoline, diesel fuel, as well as crude oil. Magellan has a proven track record of expanding its reach and distribution safety steadily. Since its initial public offering in 2001, Magellan has grown its distribution by 72 times. And since its initial public offering in 2001, Magellan has grown its distribution 72 times. And Magellan pays a dividend of $4.15 to common shareholders, paid quarterly, and that equates to an 8.64% dividend yield based on today's share price. Alright, so next on the list is MPLX. In 2012, Marathon Petroleum Corporation created the company. The company's principal businesses are logistics and storage, which refers to crude oil and refined petroleum products, and gathering and processing, which deal with natural gas and natural gas liquids. Pipeline capacity in the company's logistics and storage business is 4.7 million barrels per day. For the first quarter of 2022, MPLX announced a quarterly cash dividend of 70.5 cents per common unit, or $2.82 on an annual basis. And that works out to an 8.7% dividend yield at yesterday's close. Now, given the high prices of oil and ongoing demand, this company should be able to continue paying their dividend for years to come. Alright, so what do you think of the companies on this list? Do you own any of the stocks or are thinking about buying? Or do you prefer any others? Let me know in the comments below because I love reading and responding to them. In the meantime, thank you so much for watching and I'll see you in another video. Bye.